Hello, everyone, and welcome to my YouTube channel. Well, today I'm here because I had felt an urgent need to address a few questions and queries that I have constantly been receiving on my comment box. So today I'm here because I want to tell you all that I'm aware of the kind of questions, the concerns you all face, the pinpoints, the struggle areas we all have, and the kind of questions that, if addressed, can help us be at a better place in our career. So I have personally focused on one thing, and that is that learning never stops. You should constantly be open to learning. You should be open to collaborate and learn from others. Well, I know that, most of us face a lot of questions around what should we prepare for the interview, where should we get started. I have an interview on tax analyst, I have an interview on financial analyst or equity research, but I'm not able to figure out where should I start with. So today I'm here because I wanted to, invite you all on this live call where we can discuss all your queries, and at the same time we can practice a few interview questions that I feel are the most commonly asked and are yet very important. Time and again, I'll be taking your live questions from the chat box. And today, I want to focus more on jobs related to equity research, valuation, lead advisory, financial modeling and valuation, and yes, private equity as well. FP&A, definitely I will talk about that too if time permits. But today I have a short presentation which I want to show and be open to your interactions. So those of you who are interested can actually join me live on this call as well. I'm sharing the link in the chat box for you. So I've shared the Zoom link in the live YouTube chat. If feel free to join me on this live call where you can interact with me one on one and also speak out your questions and queries while I interact with you throughout this short session. So without any further ado, I wanted to brief you all about a little about my background. So I have close to 2 to 3 years of experience working in the valuation domain. Prior to that, I have done a lot of internships in various areas of finance, such as equity research, fundamental analysis, equity research, marketing analysis, financial planning, and corporate finance. So today I'm here because, I understand those questions, those queries, those concerns you all face. And let me just present my screen where, I have prepared a few questions that I feel are important for all, and it must be addressed at this point. Is my screen visible to all of you? I hope it is. So without any further delay in the same, let me get started and brief you through a few commonly asked finance questions that anyone can expect out of you, irrespective of your profile, be it valuation, be it financial modeling, be it financial due diligence, etc. Right. So, a couple of questions to start with. I think it's very important for all of you to know what financial modeling is, what valuation is. But before that, it's also important to understand the accounting process because we should follow a step-by-step approach, right? Only when we know कि financial statements को कैसे prepare करते हैं is when we can understand the components of the financial statements, right? So I have a question for all of you before I actually start, and that is tell me that what is the first step towards preparing the financial statements? So, what do you do first? Well, you understand the accounting process. Why? Because let's say that you're preparing accounts for an Indian entity, or you're reviewing, or doing an audit, or rather looking at the taxation for an Indian entity. Can you all tell me that which accounting standard is applicable to most of the organizations or companies working in India? Which accounting standard is used to prepare the financial statements in India? Well, it's the Ind AS or the Indian Accounting Standard. So it's important to realize that, before we start on a career in finance, or before we start realizing that, there is so much that the finance industry has to offer, it's also crucial to understand that everything in general revolves around the financial statements, right? First, you could either be preparing the financial statements or you could be analyzing the financial statements, right? You could be on the audit side where, you are independently reviewing the transactions of the business, the invoices, the credit notes, the debit notes, the sale book, the purchase book, cash book. You would be involved with a lot of bank reconciliation to check whether or not the financial statements that are published are ready to be audited. They present a fair and just view of the financial performance and financial position of the business, right? So the first step is also to just have or pick up some basics of accounting. It means all I'm asking you at this stage is try to understand the accounting process, which means we should know at least what journal entries are. We should be aware that once the transactions are recorded in a chronological order, the next step is to prepare the ledger and then the trial balance. Once the trial balance is prepared and the debit side is equal to the debit credit side, what we call it as is called bookkeeping. So the financial accounting or financial statement preparation begins once the bookkeeping process ends. So I hope all of you are clear with these concepts. And yeah, I mean, once you are have a brief understanding of the various kinds of accounting standards, Ind AS, AS, Indian GAAP, IFRS, US GAAP, Australian GAAP, all of those out in the market, you would be able to understand how that particular financial statement is prepared, and also what is the basis for accrual or cash, however they are prepared. The kind of methods they've used, the assumptions that are used. This is very important for you to get a brief understanding of anything in finance, even if it's due diligence. Due diligence is all. What is due diligence? Financial due diligence is, it actually starts as a major component of a financial due diligence report or a commercial due diligence report, is to look at the financials and comment component by component, first what the revenue factors are, probably what the cost factors are. But you don't stay restricted to just these factors, right? You also look at what the qualitative factors are that could impact the business in general. So financial due diligence might come at the point of valuation. It might come after the financial statement analysis has taken place. But before that, I'm just giving you a very basic and a scratch level start point, and that is study the basics of accounting first. Once the basics of accounting are clear, what is the next step? The next step is to start understanding what all financial statements are there. So first, I'm assuming that we all know what financial statements are. Once we know that they are statements, they are some sort of a summary of everything that has happened inside the business. And because that business is not restricted just to the operating activities, but there could be some non-operating activities as well, which, hinder the business or provide to its profitability. It is important that, we start to categorize these statements into different parts. So can all of you let me know in the chat box the various kinds of financial statements available? So which is the first primary financial statement, and what are those three top financial statements you would find in almost every sort of an annual report? Which is the first one? So the first financial statement gives a fair understanding of what the company has earned or what the company has lost during a financial year. Can you name that statement? Correct. It's called the profit and loss account, or the statement of earnings, or the income statement, right? And the second statement, which depicts the total amount of assets and liabilities with the business, is called balance sheet. Okay. And the third statement, which I think everybody of you knows, and you've also let me know in the chat box, and that is cash flow statement. Now, can any one of you tell me, probably join me in this Zoom call, and let's have a one-to-one discussion on why do you think the cash flow statement is important? If I ask you which financial statement is the most important, can I say it's the cash flow statement? If not, then tell me which financial statement out of the income statement, balance sheet, and cash flow is the most important and why, according to you? Well, I'm still waiting for your answers in the chat box because I believe that I have an audience that genuinely knows everything about finance and are here to just enhance their knowledge and add a lot of value to everybody in the group. Okay, Abdul feels that the balance sheet is the most important. Well, I will leave it out as a question for all of you to find out, right? I personally believe it is the cash flow statement because, as you talked about liquidity, right? See, all the financial statements are important, but understand that cash is the king. Exactly, that's true. And since cash is the king, it's important to have a view on the liquidity position of the business. And the cash flow also takes care of the income statement components and the balance sheet. So now, additional question to all of you is, what is the starting point of a cash flow statement? Can any one of you tell me that what is the first component by which the financial statement or the cash flow statement begins? The starting component of the cash flow statement. Anyone? It's the cash flow from operating activities. That is correct. But how do the cash flow from operating activities begin? Like, what is the starting point to calculate the cash flow from operating activities? No, no cheating here. I just want everybody to answer from whatever they know. No Googling, no cheating from here and there. Well, that's correct. It's the cash flow from operating activities. But what is the starting point of calculating the CFO or the cash flow from operations? Another 1 minute for all of you, and then I'll answer. Awesome. So we got the answer. It's net profit or surplus as per the profit and loss account. So which means that the cash flow statement is automatically starting with the component of the income statement. And then it also considers the increase and decrease in the current assets and current liabilities, which means that, the current assets and liabilities, which is a part of the balance sheet, are also considered in the cash flow statement. Am I making sense? Can I have some hearts, some smiles? Can you please like this video? I mean, show me that you're here and you're learning. Any questions, anyone at this stage? I'll wait for 2 minutes to see if you have any questions and if you're liking the way we are going ahead with this call. Well, I see a lot of enthusiasm in the chat and I'm happy to have that. Yes, Mazhar, I'm already aware that due diligence is an area that you want me to talk about, but I would not be able to talk about due diligence unless I'm sure that you know what due diligence is, and you're also aware about why is due diligence even important. So I'll come to that shortly, but as of now, maybe I think we are excited and I'm ready to share something with you that I'm sure will, help you all answer some basic questions. And then I'll come back to the chat and see how many of us are able to resonate with the same. Is my screen visible to all of you? Please let me know. Yes, is my screen visible, guys? Great. So I'm hoping that you all can see my screen and are there on the other end to answer the questions that I will ask you right away. Well, the first few questions, walk me through the cash flow statement. As I already mentioned, that according to me, cash flow is the most important. Cash is the king, and it's important to understand and get an idea about the liquidity position of the business. Why? Because it lets me, as a layman, as an investor, I want to know if the company has enough cash. क्या वो मेरे पैसे पे कर पाएंगे in the short run? If they have the cash to be able to run its operations. जिस company पे इतना liquid cash ही नहीं है कि वो अपने day to day operations को कर पाए, how would they pay the long term liabilities? So this is a very casual definition. Don't think that she's just speaking in air. I know that I can give you a technical definition, but that is not the objective, right? And for those of you who are already aware and know the concepts, let me know in the chat and I'll be happy to read all of your comments. Well, another commonly asked question for the recruiters is, walk me through the three financial statements. So as we already spoke about the income statement, the balance sheet, and the cash flow, again, these are the primary three statements, but apart from that, we have two more things that we definitely look forward to along with these financial statements. One is the statement of changes in equity, right? And the second is the notes to financial statements. Okay, let me stop again and ask you all, why are the notes to financial statements important? Okay, so why are the notes to financial statements important? Yes, Sudeep, आप बिल्कुल मुझसे LinkedIn पे connect कर सकते हो. And you can also get added on my WhatsApp group, जहाँ पे I'll be sharing all the updates on the sessions, the webinars, the courses we'll be coming up with. I'm more than happy to help you. But अभी के लिए, I've asked a question, let me know. Why are notes to accounts important? और notes to financial statements क्यों important है? What kind of an information do they provide? Amazing. We've got such an excellent audience. I don't think कि मैं आपको कुछ नया सिखा सकती हूँ. आप सबको already बहुत कुछ आता है. Well, it's true that they provide you an in-depth view or information on every component and gives you an understanding of what it actually comprises of. Yes, that's correct. And I would be happy to show you an annual report, where we can together study on these topics. We can go into the exact detail that is required for you to become an equity research analyst or a financial analyst or enter into due diligence, valuation, financial modeling, deals, mergers and acquisitions, etc. So at this stage, I want to take a pause and, give it out as a shootout that it's a humble request to all of you that do not hop on to topics like valuation, financial modeling without a good understanding of the financial statements. Because trust me, my everyday work revolves around reading approximately 10 to 15 annual reports. And when I do that, I am by default expected that I will be able to understand the financial statements in detail. So when you enter a role like FDD, deals, valuation, corporate finance, tax, you are expected to know the concepts already, right? So if you work, for example, you're working in Indian taxation, don't you think that it's important for you to know how the income tax rates are computed? What is the tax structure in India? What is GST? How much of GST is applicable on what products, and what are the exempted products which do not attract GST, etc.? Or what is the corporate tax rate that is applicable in India? Right? Those things are extremely important for you to get started. And where we lack the most is we do not want to go and study the basics. We don't want to study from the scratch because we feel that, I want to enter into a very lucrative area and I'll be able to do it. But we fail at interviews. We don't feel confident in interviews because we've not spent enough time in these basic concepts. Do you all agree with me? How many of you agree with me? Right? Well, I again want to invite you for an additional few questions that I have in store for you. So let's discuss those and let's see where we stand. Well, as I talked about a good understanding of the three financial statements, at the same time, now I want you to also focus on each and every component of these statements. So there's a question which says that is EBITDA a good proxy for cash flow? So just by looking at this question, we can understand that cash flow is not equal to EBITDA. And if cash flow is not equal to EBITDA, then what is the difference? Right? So what is EBITDA? EBITDA is earnings before interest, tax, depreciation, and amortization, which means that it's different from EBIT, it's different from PAT. So the starting point for you before you answer this question is to have a good understanding of what differentiates EBITDA from EBIT and EBIT from PAT. So we should have a crystal clear mind when we talk about the components of the income statement, or we walk someone through the income statement, which is there in the question 3 here, that walk me through the income statement. So the next time they ask you a question on what is an income statement, answer in a way that it looks like you have worked on a lot of income statements and P&L accounts. So you always, start with the revenue from operations. You have other incomes, right? Then you arrive at something called total revenue. Now, that total revenue comprises of the operating revenue or the turnover, I can say the sales which are generated from the day-to-day or the operating activities of the business. From that, we subtract something called COGS, which is the cost of goods sold, which is a direct cost to the firm for selling the products and services that it deals in. And at the same time, you subtract this general selling and administrative expenses, depreciation, etc. So walk through an income statement in a manner that you are aware that EBITDA is, an earning before we deduct the depreciation and amortization. Now, what is depreciation and amortization? Depreciation and amortization are related to the assets first. Now, within assets, we have tangible, intangible, long-term, short-term, etc. So since the assets are divided into tangible, intangible, we can also have a charge, a fall in the value as depreciation, amortization, and even impairment. So goodwill is always impaired. Goodwill is not said to be amortized. So you should be able to calculate these things. You should be able to have a clarity at every point before once you move ahead in the income statement or rather any report or any statement. Now that we know that EBITDA, say we subtract the depreciation and amortization, you should know what is EBIT. EBIT में से D और A हट गया तो बचा EBIT, earnings before interest and tax, which means the interest and tax is yet to be deducted. Now, can you all tell me that which earnings out of EBIT and EBIT and profit after tax is more important for an equity shareholder? So is an equity shareholder more interested in EBIT, or they are more interested in the amount of PAT, which is profit after tax? So is it EBIT or PAT for an equity shareholder? Equity shareholders are called the residual owners. They are also called the part owners of the business, right? So when I talk about profit after tax, is that more relevant for an equity shareholder, or is EBIT more relevant for an equity shareholder? What do you think? Correct. It's the amount of PAT. Why PAT? PAT because that is the amount which is finally available out of the total earnings to be paid to the equity shareholders, right? Why not EBIT? Because from EBIT हमें अभी भी इंटरेस्ट और टैक्स पे करना है. So equity shareholders को residual owners बोलते हैं. They are called the owners which get their part or their share in the business only when every third party has been paid, right? So once we paid the tax to the income tax authorities, we pay, the interest to the debt holders or the debenture holders. Only then whatever is remaining is either paid out as dividends or it is retained back in the business as retained earnings. I hope you are all with me till this point. So let's start the exercise again. And definitely, I won't take much time because we are coming back on the same topic time and again. So today, I wanted to focus more on the starting point, which is financial statements, understanding what these statements are and how they are connected to each other. So, for example, the income statement is connected to the balance sheet, and the income statement and balance sheet components are connected to the cash flow statement. For example, if I talk about profit after tax, if retained, is added back to the shareholders' equity in the balance sheet, and the profit after tax also becomes the starting point of the cash flow statement. So this clarity is important for you to enter into any role in finance or valuation or FDD or deals, etc. Just a little more understanding of what you can focus on is, again, as you see, there's a lot about financial statements, right? I'll give you a moment to read through these questions, but I won't overburden you with the entire document. Why are increases in accounts receivable a cash reduction on the cash flow statement? One of the most commonly asked question for any role. Why do you think it's important? Because it's related to the concept of accounting, right? We should know that when a cash is not received and the cash is yet to be received, it is considered as an asset, right? It's an accrued income for the business. And if the accounts receivable means that we've not received the cash against these accounts receivables, which means that the cash is yet to be received, but as of now it's a blockage of cash, right? We have not really received that cash in our books of accounts, and for that reason it's considered as a cash outflow and deducted in the cash flow statement. So you should be able to come up with your own reasonings on the same, and I hope that most of you who are added with me on the group or are a part of my regular sessions are aware of how much I would like to go into these details and interact with you on these areas. When do you capitalize versus expense an item? It's important to know what expense means, what capitalization means. Is expense short term or long term, right? Is it bad if a company has negative retained earnings? Is negative retained earnings possible? Can a company has negative retained earnings, a negative working capital, and what kind of companies can have a negative working capital or retained earnings, etc. So the negative components is also important because that is something not everybody is going to ask you. And if a recruiter pinpoints or wants to trouble you, this is where they'll touch upon in the financial statements. Because general चीजें, commonly asked चीजें तो हर कोई पढ़ के बता सकता है, but it's important for us to identify what can be a tricky question for the recruiter, right? Again, I won't go into a lot of details. As you can see, I've prepared a list of long question and answers that I'm happy to share with some of you if you are serious about learning. But as of now, I just wanted to get you a brief understanding on the financial statement part of the questions that can be expected from you, right? So I hope that you enjoyed this session and have stayed with me here till the end. Now I'm open to any questions if you have, and I'm happy to invite you to the next session with me, wherein we'll be talking in detail about your specific questions. So I'm open to your queries and concerns and questions. Feel free to let me know in the chat box or unmute and speak if you're a part of the Zoom call. Any questions, anyone? Yes, Mazhar, please ask your question. Buy side equity research reports and sell side equity research reports. Very good question, Mazhar, but I want to know if you have already done your research before I take up that question. What is your understanding of the buy side and sell side equity research report? So let me know your understanding and I'm happy to add to it, because this is something I want you to figure out a little bit, right? Because I'm sure this is not that difficult to understand, but if you still struggle, please get added to my WhatsApp group and I'm happy to answer you there or get on a one-to-one call to explain you better. I got into audit and EY, but let's say if I want to change into finance. Yes, Abdul, that's pretty much a case you can do, but I would like to understand that what are your exact areas of interest in finance? Because audit is not a bad domain to enter into as well, but at the same time, where in finance would you go if not audit? Let me know the same. And also those of you who wants to get added to my WhatsApp group, it's a knowledge sharing group, right? I share a lot of knowledge, lots of books, lots of content, time and again, to push you people to start your learning and to start the revision exercise. If you've not got added to my WhatsApp group, just write me an email on this email ID, and I'm happy to help you all. I'm just sharing the email ID in the chat box for all of you. So I've shared my email ID with all of you in the chat. And if any one of you wants to get added and you are serious about learning, let me know a brief paragraph on why do you think this would be an important value addition for you. Risk and investment banking. Okay, good, Abdul. You can personally connect with me after getting added on WhatsApp, and I will be happy sharing a few reading material first. So it's better you go through what the risk and investment banking profile will look like before we hop on to this, right? It's important to understand what you will actually be doing before we do it, right? So when I talk about risk, Abdul, what is beta? How is risk calculated in finance? Can any one of you tell me? Mazhar, to answer your question on equity research, I would say that, I have a module running on every weekend where I would be preparing you for 2 months on the equity research analyst module. If you are interested, you can join that module with me and attend live classes every weekend, wherein we work with real data. We download the data from the annual reports. We work through different databases and open sources, and the eventual objective is to prepare a equity research report, and I will be there with you at every step of the way to help you prepare this report with you. You are free to choose the industry you want, choose the companies you want to analyze and study, and I'm happy to help you with the same. Again, you can drop me an email on the given email ID, and I'll send you the link to get added. It's always so great to interact with all of you, right? So I'm happy that I'm here, and it fills me up with a lot of motivation and excitement that you all are here to hear me and have contributed in whatever ways you can. Thanks a lot. Yes, Mazhar, the recordings for the equity research module is available. But as of now, the live training is going on every weekend. So you can join and avail the recordings for the past sessions and get started with the assignments, the tasks that I have in store for you. So again, to get the recordings, to avail those things, you can send me an email ID on the given email, which is kgflearning@gmail.com, and I'll be happy to share the details with you. Low beta, low risk. Okay. So can I say that in finance, risk is measured by beta? Yes, Sudeep, what do you think? Is risk beta or not? So is risk and beta the same? Well, there is a difference. So just want to close the session by saying that, in finance, or rather in statistics, risk, deviation, dispersion is measured by standard deviation, right? It's measured by standard deviation or variance. So beta is just a measure of systematic risk. It does not capture the total risk associated with the stock of a business. Risk is a wider term, absolutely. So within risk, we have something called systematic, unsystematic. Beta only measures the market risk or the systematic risk, right? So it's important for you to know what unsystematic risk is. Even if we cannot calculate it directly, we should be able to understand the difference between the two. Now, I want to quickly ask all of you that did you like this session? Do you want me to come live more often and talk about such topics? Maybe your feedback will help me regenerate, feel happy about me being here, and at the same time, give me a confidence that yes, you all have enjoyed the session as well. So, did you guys like the session today? Do you want me to come here more often and talk with all of you? Great. I'm so happy to know that you've all found time to be here with me and be engaging throughout the session. Thank you so much. And if you've missed any part of it, feel free to watch the recordings on the same channel. And if you haven't liked, shared, and subscribed, kindly do the same. All the best. Keep growing, keep learning, and I'll see you all soon. Thanks a ton.